The first one being the fiscal policy, and the second one being monetary policy. External sector. So once we finish this internal sector and all, we will be discussing on external sector. Okay. Yes, so we need dollars for import. If we don't have dollars, we cannot import. That is what is happening in Sri Lanka. Sri Lanka does not have enough money. What money? Foreign currency. Okay, good evening. So today we'll be starting with Indian economy. All right. So before we go into the, so today's discussion being the introduction class, I will give a broad overview of the syllabus that we will be covering, topics that we'll be covering in the classes. Okay. And then some of the basic concepts that you need to know in economics. And then we will, I will tell you the sources and other things. So basically, we'll try to get oriented to economics and what we need to study in economics, right? So if you are, by now, if you are aware of, in your prelims examination, whether it is your UPSC or state services, KPSC, you have these topics that you need to cover. So today in our class, we will be starting with Indian economy, right? So I will try to give you a list of topics that we will be covering, okay? And the importance of economy, where to read from, what you need to read, more importantly, what you're not supposed to read, okay? And then also we'll start with some simple terms, concepts relating to economics. Right. Let's come and discuss the syllabus, or what are the topics that we will be covering in our classes. So one of the very important topic that we'll be starting with is our fiscal policy. Now, what is this fiscal policy? Let me just very briefly explain the syllabus. Okay. So what is this fiscal policy? Fiscal policy is everything that the government does to earn money, that is income, and everything the government does with respect to expenditure. Okay. It's the policy taken up by the government with respect to its income and expenditure. Like even in our house, we have fiscal policy. We don't read about it, but every house has a fiscal policy. What are we doing to earn money, and where and how are we spending this money? Same thing over here also, government fiscal policy, or what we call it as the budget, or what we call it as public finance, deals with income and expenditure policy of government. So what is the main source of income for the government? What is it? Taxes, right? So one of the main source of income for the government is taxes. So in our classes, we will try to understand the basics of taxes, classify the taxes like direct and indirect taxes. What are the different types of taxes that we know of? Okay, and tax reforms like GST, VAT, and things like that, we will try to understand. Okay. In addition to that, other incomes also we will be studying, like disinvestment. For example, Air India was sold to Tata. Right? That is an example of disinvestment. That's also an income for the government. Then government borrows money. It's not an income per se, but it's also a source of money for the government. So like that, we will try to understand where does the government get all its money from, and how does it spend it on, or what is it spend it on? So it can spend it on salaries, pensions, infrastructure development. It can spend it on the welfare of people in the form of subsidies, right? So these are the expenditures of the government. Then several others. So we will be basically talking about the income and the expenditures of the government. We'll also have to focus on the reforms undertaken by the government in order to increase its income and reduce its wasteful expenditures. So there are several expenditures which are inefficient. Government is taking efforts to reduce it. For example, subsidies. The government has introduced what is known as DBT, that is direct benefit transfer, where the money is given directly to the accounts of the beneficiaries, instead of simply giving products which can be misused or which can be diluted or sold outside this one, something like that. They directly are transferring this money to the accounts of the beneficiaries. So like that, all these things we will be discussing under fiscal policy. Along with that, the concept of budget, finance commission, okay, reforms in the entire budgetary system called as FRBM, Fiscal Responsibility and Budgetary Management Act. All these are important from both prelims as well as from the mains point of view. All right. So this is what the government does, okay, as far as your taxes and expenditures are concerned. And they play a very important role in economy because it affects demand, it affects savings, it affects investments, etc. All this I will discuss in detail later, just to give you a broad overview. Like taxes. If tax is increased, what will happen to the demand? Demand will reduce. If government wants to reduce the usage of something, reduce the demand, what will the government do? Increase the taxes. Government does not want us to drink alcohol. So what will government do? Increase the taxes. Government wants you to consume something. It will reduce tax, like medicines. So 0% tax. Why? Because you will consume medicine when you are sick. And we don't want to make money when somebody is sick. So government makes it free. Vegetables. Government wants us to eat more vegetables. So the taxes is 0. So it can affect the demand, yes or no? It can also affect the savings. See, for example, if you are paying tax, the government will say, you invest in this insurance, you invest in pension scheme, you invest in deposit scheme, I will reduce your taxes, income tax. So if you invest up to 2.5 lakhs, that much money is reduced from your taxable income. So what will you do? Instead of paying taxes, what will you do? You will save that money. And that money will in turn will be invested. Agreed, all of you? So this is how tax policies or fiscal policy can affect demands. It can affect savings. It can promote investments. All that we will be understanding in our first chapter, that is fiscal policy. Next, we will be discussing monetary policy. So as the name itself suggests, monetary policy, that is money. Okay, something to do with money. Now, take this example. So when there is increase in money, let's say you have a lot of money. Okay, in your pockets, you have a lot of money. What will happen to your demands? More. You will start consuming more. The demand will increase. Imagine everybody has a lot of money in their pockets. The demand will increase. So increase money will increase demand. When there is increased demand, what will happen to the prices? Prices of goods and services. That also will increase, right? So when the money increases, demand will increase. So money in the sense I talked about individuals. Let's say the entire economy may money supply increases. Government goes on printing currency and giving it to people. What will happen? People will have a lot of money. They will be very happy. But then they will increase their demand. When they increase their demand, the prices will increase. Everything will become very expensive. On the other hand, when there is less money, the demand will reduce. What will happen to the prices? Prices will reduce. Correct? When people don't have money, there will be less demand. Let's say recession, COVID. After COVID, what happened? People lost their jobs. People did not have money. What happened after that? Demand reduced. The prices will then start to fall. You might have heard, oh, real estate, everything is falling down. That business is down. They're all. So they will try to attract customers by reducing the prices. According to you, which one is good? This first condition is better or the second condition is better? First is better in a controlled way. What do you mean by a controlled way? Balance between both. So in economy, it's always true that we need to have stability. In a way, what you said is also right. You can check the inflation. So increase in the prices is good because it will make profit. I mean, it will bring profits. Profit will increase investments. In more investments means more jobs, more economic growth. Yes or no? You make more profit. Business, farmers. If farmers make more profit, when will they make more profit? When the prices are high. When they make more profit, what will happen? They will invest more in irrigation or in inputs like seeds, better manure and fertilizers and things like that. This will increase the productivity, and if productivity increases, it's good only, right? So this also is good. Reduced price means it will benefit the consumers, right? So that's also good. We'll spend less money. We will have more savings. Then we will invest more. Both are good, but in a controlled manner, as he said. Okay, so therefore, we need to have stability. Price rise to an extent is good because it is creating profit. Stability in the prices is good because at the same time, consumers are also benefiting by the right price. So we need to ensure stability. In other words, when we say we need to ensure stability, what does that mean? It means that we need to have the right amount of money. Yes or no? Right amount of money. Neither too much or too less. The right amount of money, which will create a demand but not inflation. It will make profit but not increase the price. So this is done by the RBI. This is done by the RBI, Reserve Bank of India, or the central bank of any country does this monetary policy. So fiscal policy is done by whom? By the government, finance ministry. Who does the monetary policy, the money supply? It is the central bank of a country, RBI. So RBI has tools. It has got tools using which it can absorb money and it can supply money. So when there is shortage of money, it can supply money. When there is excess money, it can withdraw the money. So by doing this, RBI will ensure that there is right amount of money to ensure stability. So this is the first two chapters that we will be discussing. The first one being the fiscal policy and the second one being monetary policy. Fiscal policy is to do with taxes and other income and expenditures. Monetary policy is to do with supply of money in the economy. Okay, so these are the two things that we will be discussing. Okay, then the next one that we will be discussing is that to assist our, in our economy, there are several financial institutions like banks, okay, DFIs, Development Financial Institution, NBFCs, non-banking financial companies. So all these are the different types of financial institutions. So what are these financial institutions? We have the RBI. Okay, we have financial institutions. We have people. When we say people, it can be individual. It can be companies. Okay, it can be government institutions, whatever. So we'll say people, okay, for us to understand. So you have financial institutions. So RBI, through financial institutions, implements its monetary policy. And financial institutions also play a role between borrowers and lenders. There are two types of people in the economy. Some who have money and some who want money. Okay, I have a lot of money. I want to invest in the bank. Or I want to invest, but I don't know where to invest. So I'll go and put that money in the financial institution. Simple thing what you do is you go and put that money in the bank. What will the bank do? Will they keep it in the locker safe? No, they will use that money. For whom? For somebody who wants to borrow that money. This is what financial institutions do. One, it implements RBI's monetary policy. The other thing it does is it acts as a middleman between whom? Borrowers and lenders. Everything, whether it is banks, whether it is NBFCs, whether it is DFIs, everything, it plays something like this. Now you go to share markets. Okay, what happens in share markets? So share market is an NBFC. Share market is a NBFC, non-banking financial company. You might have heard, no, share markets, right? So what do you do in that share market? Share market, what do? You buy shares. Why do you buy shares? Because you have money. You don't want to simply keep it. You want to invest. So what do? You buy shares. Okay. From whom? From, let's say, XYZ company. Why is XYZ in this share market? It wants money. You have money, so you went to share market. XYZ wants money because it wants to open a new factory. But it does not have money, but it wants to open a new factory. So XYZ is the borrower. You are a lender. Not technically a borrower lender, you don't call it in share market, but I hope you got the idea. So somebody who has money wants to invest. Somebody who needs money will come there. So that is what is financial institutions and financial market. So in this chapter, we will be discussing about all of this. How does financial institution work? What are the different types of financial institution? What are the different types of institution and their instruments? Like share market is an institution. Shares are the instruments. Like that, there are different bonds, debentures, okay, P notes. Like that, there are so many different types of instruments, different types of institutions, like venture capital fund, angel funds, share markets, commodity markets. All those things we will be discussing in financial institution. Again, a very important pillar of our economy. So did you understand? So one is the fiscal policy, then the monetary policy, then the financial institutions and financial market. Next, external sector. So once we finish this internal sector and all, we will be discussing on external sector. Okay, so Indian economy is not a closed economy. It has its relationship with the outside world, with other economy, US, Australia, Japan, China. Okay, so in external sector, we will be discussing about the flow of, basically when we say external sector, flow of foreign assets, goods and services, movement of people across our borders. You understood? So when we say foreign assets, currency, foreign currency. So dollars come into India and dollars go out of India. We buy goods, we sell goods. We buy services, we sell services. And there is movement of people. So this cross-border economic activity is studied in external sector or foreign trade in this chapter. So in this chapter, some of the important topics we'll be discussing is the type of foreign currency assets. You might have heard about FDI. You might have heard about FPI, foreign portfolio investment, foreign direct investment. Now, McDonald's coming and opening its outlet in India is foreign direct investment. You understood? So like that, we will be studying the different types of flow of foreign assets, foreign currency assets. Similarly, we will be studying another important topic called as BOP, balance of payment. So balance of payment basically is an account that records the flow of foreign currency from outside to India and from India to outside. Okay, in simple words, let's say there is only dollar versus rupee. Let's say there's only one foreign currency, dollars, and Indian currency, rupee. So how dollar is coming into India and how dollar is going out of India. We need to record it so that we can take appropriate action. Let me explain to you this way. So we buy oil. Yes, we don't have enough oil. that we produce on our own. So we have to import oil. What currency do we use to import oil? We use dollars. We buy oil using dollars. But can we print dollars? No. Okay, we need dollars, but how will we get dollars? By not exchange, by export. Yes, exchange and all, that's fine. But how do we get that dollars? Why would somebody exchange rupees when there is no need for rupee for them? Correct? No? Exchange at individual level, it's fine. But globally, there's no demand for rupees. Why would anybody exchange dollars to rupees? And what will they do with that rupees? Nothing. So we need dollars. How do we get dollars? By export. When we export something, we get dollars. Yes or no? When we buy we have to pay in dollars. When we buy oil, we have to pay in dollars. When we export, we get dollars. So we have to ensure that this buying is nothing but import. So we have to ensure that export equals import. Export equals import, or import equals export. Otherwise, what will happen? There is going to be shortage of dollars. If there is shortage of dollars, what will happen? We will not be able to import essentials goods. Agreed, all of you? Yes, so we need dollars for import. If we don't have dollars, we cannot import. That is what is happening in Sri Lanka. Sri Lanka does not have enough money. What money? Foreign currency. It does not have foreign currency to purchase oil. So there is shortage of oil in Sri Lanka. So therefore, there is a political and economic crisis. So we need to prevent. India is not immune to it either. India has already faced these problems 3 times. What Sri Lanka is facing now, India has faced it already 3 times. Okay, when we had war and other reasons and all that. But anyway, so we track this export and import in what is known as BOP. Balance of payment. We track import and exports in what is known as balance of payment. Okay, so that is what is this. So in that we have different accounts and all that. We'll discuss it later. Then we have in external sector, another important topic is how value of currency is determined. How does value of currency increase? How does the value of currency decrease? All that we will be discussing here. We'll also discuss trade relationship between other countries also. Then we'll also be studying international organization like WTO, World Trade Organization, to promote trade across the world. We have an organization called as WTO, World Trade Organization, which promotes rule-based trade. Then World Bank, which promotes infrastructure development across the world. Then we will be studying about IMF, International Monetary Fund, which ensures liquidity across the world. Then we'll also be studying about other financial organizations like BRICS and ADB, Asian Development Bank, etc., whichever is in news. I won't stress too much on that. It's all factual information, whichever is in news. Then we'll also be studying about economic integration. How countries' economy are related to each other. Now, if I take, for example, so the countries of European Union and India and Sri Lanka, the level of integration between India and Sri Lanka is different, and the European countries are different. I hope you know, in European country, we have one single currency, euro, but it is made up of several countries, Germany, France, and so many other countries are there. So they are integrated to a higher level. People can move around freely. They use the same currency. They have the same export-import policy. Everything is the same. So this level of integration in European Union is called as monetary union. Between India and Sri Lanka, we have a friendly relationship and we have a free trade agreement. Okay, it's a level of integration. So like that, you have different levels of integration, which we'll be studying. Okay, some with very minimal trade relationship to as much as European Union, where they have a single currency. There are different levels of integration. Did you all understand that? Right. So all that we will be studying over here. So these are important topics from the external sector. Then after this, we'll also be studying about other things like history of Indian economics, how Indian economy has evolved from the time of independence, then national income and economic growth and development. How do we measure the income of India? Okay, you might have heard about the GDP, yes, gross domestic product. So it is a way to measure the income of a country. So like that, we have national income, how it is measured and all that. Then economic growth and development. What is growth? What is development? What are the different indicators of growth and development? Planning. Okay, different phases of planning, different types of planning. What kind of planning that we have, which is the organization dealing with planning. Then concept of poverty and unemployment. Okay, and current affairs and schemes relating to these things. So those we'll be discussing next. After that, some current issues like inflation, okay, black money, okay, corruption and black money, tax haven countries, okay, demonetization. Demonetization quite old, but at least some idea we will try to get when we are discussing black money. Stressed assets in the bank. Vijay Mallya and all has taken loan and run away, right? So that has led to stress in the banks. So what is that stress? It's called as non-performing assets. So what is that? And what is the solution to address this, etc.? Unemployment, jobless, growth, okay, economic slowdown, concept like digital economy. So today, a lot of activities are happening in the digital world, even economic transactions, like you might have heard about cryptocurrency and all that. Okay, different types of wallets, right? So digital wallets you might have heard, right? So Paytm and all that concepts we will try to understand over here. Any other things as we discuss in the class and something comes up in the news, we will be discussing them also in little bit detail. Is that okay? So these are the syllabus.